All right, hello everyone, and welcome to today's webcast on how to thrive in a trader's market. Welcome to the webcast, and let's get right to it. So, good to get this right out of the way. There's so many different webcasts that one can attend these days. I know you get inundated. Let's make sure you're in the right place. So, you're in the right place right now today if you currently dedicate or want to dedicate a portion of your portfolio to short-term trading to grow your portfolio faster, okay? Or potentially you'd like to have winners outpace losers so you can get reliable portfolio growth. And perhaps finally, you want to feel more confident in your decision that you bought the right stock at the right time, and most importantly, that you can sell it at the right time in the future. You know, that's Dr. DeLito, who is the founder of our company here, VectorVest, comes from the tire business, and he would tell you that's where the rubber meets the road, is in the selling. And it really is. It helps us to mitigate against disaster and hopefully capture a lot of profit along the way. So we're going to be learning all about those things in this webcast today. And what my quick promise to you guys is that you can adapt and thrive no matter what the market throws at you. And we're going to show you just how to do it. We're going to show you just how to do it today. What you're going to find out is it's just going to require the right tools for the job. Just to give you a quick story on that front, I've got a house that I just put up for sale and actually sold, but I've got a rather large deck, that needed to be restained. And I went out there with the old belt sander, and started to work away at it. And I said, my goodness, this is going to take me a couple days and a lot of sweat equity. And I said, well, let me run up to the store, and see if there's a better tool. And eventually I landed on this drum sander, that did the whole job in about 30 minutes. So, it really is about having the right tools for the job to get the job done and get it done right. And so we're going to be showing you the tools that will inevitably make this possibility of being able to thrive no matter what the market throws at you in all conditions possible. Okay, so let's get to it. This is a quick look at portfolio performance. This is a snapshot that runs from October of 19 all the way up through February of this year. I'll give you the updated information as we get to it. We are a bit higher than even where this slide is as of earlier this year. I think we're clocking in at about 89%, something like that right now. It has been a little tougher sledding, over the last several months, and we've had some ebbs and flows. But main message I want to get across here is this is not back testing. This is live trading that's cleared through an API, through our broker partner, in this case, Ally Invest. And so, this is 100% real deal, real executions in real time over the past several years now. We've actually been doing this for the better part of 3 years. I've got a lot of data, in that regard, but this gives you a nice snapshot here. And when you look at the equity curve, some of the things that should jump out at you are the areas where we have kind of a flat line that goes across. Those are times at which we go to cash. And so if you look back into this area on the chart right here where my cursor is now, that's during the COVID situation. We follow a very fast timing model. And what that inevitably allows us to do is capitalize on big market gyrations. It gets us out of harm's way very quickly. As you can see there, we had literally almost no damage from the coronavirus situation, and we were able to really capitalize on the other side of that. You can see it take a big jump there in the middle of April. The market kind of did a pretty severe snap up off the lows in March, but kind of came back down and then got going again. And that's when this portfolio really jumped. And it takes big jumps along the way, and we'll continue to do that in the future because of the timing that we follow and then the stock selection methodologies at which we deploy. So you're going to learn all about that. One of my overarching goals here was to design a system that would make money every month. And the reality is, that's probably an unattainable goal, although it still is my goal today. But it's something that drives us to try to really get good returns on our time and our investing effort, right, on a month in and month out basis, if at all possible. So that's what we're trying to accomplish. And I'm happy to report that we do make money little over 8 months out of every calendar year for the last 3 years now in aggregate. So, and it's coming into the tune of a little south of 60% at this point. We had been clocking in at about 60% annualized rate of return for the last 3 consecutive years. And we're just shy of that, about 58% right now. Okay. But still, I mean, what I'm telling you here is this isn't the only good patch, of data that we've collected over the last 3 years. All right. So a little bit about me. My name is Steve Chappell. I'm the Director of Trading Systems Development here at VectorVest. I've been with VectorVest now, it'll be 20 years in October. A pretty big milestone, I guess, for me. I've been here for a very long while, and I've been created and seen and developed a lot of great trading systems, of course, along the way. But this is my pride and joy. I do think this is the best one that I've ever both seen and created in terms of real trading result out there in the live markets. Okay, I am just a small part of a big company in terms of we got some top-notch educators here at VectorVest. I'm just one of many, and so it's always good just for you folks to kind of see some faces and know that, you got a strong staff of people here that are very skilled, highly skilled educators, and you're just getting a glimpse of that here today. All right, so on our journey today, what you're going to learn about are really 3 main things. We're going to talk about how to stay on the right side of the market and keep the wind at your back. And we're going to do that, and I would just go ahead and say most of the time, whereas, in some particular portfolio environments, you don't necessarily need that to be the case. To get 60% a year or up in that neighborhood, you need to have a very, very fast market timing model that you follow. So you'll get a chance to see that. Second, how to select stocks the market is favoring right now. And that means on any time that you go to try to find them. So, that stock selection methodology can change actually from day to day. And really, I guess it could potentially change during a given day, but I haven't necessarily seen that to be the case. But it's very nimble, it's very quick, and it's very novel. It's something that you'll never have seen before unless you've seen this same webcast at some point, in a prior week or prior month. And then 3, the best way to manage these stocks to lock profits in. Okay, so we're going to talk about money management. It's going to come in 2 forms. We're going to talk about money management from a market perspective and how to manage stocks based on market direction. We're also going to talk about how to manage the individual stock trades that we place. We have definable metrics for exactly what we do after we buy something. And those metrics on the individual stock basis actually come twofold as well. We look at a profit target that we're trying to achieve, and we also establish a threshold in terms of maximum loss that we'd like to, or that we, would like to stay within and not endure anymore. The words are failing me a bit, but hopefully you get the gist. Okay, a couple of questions have come in. Is this recorded? Yes, it is being recorded. Okay, it is being recorded. All right, so on to the next. There we go. All right, excellent. So it says here, well, my plan stopped working. I reckon that's why a lot of folks, come to these webcasts is you might be going through a rough patch. You might be going through a little bit of struggle. And given the current market over the past 3 months, as there's been a big transition away from growth, back towards value, and you're seeing actually a lot of high yielding instruments outperforming those growth stocks. You're seeing a lot of REITs, and things that typically are not the norm in terms of the types of assets you'd want to go out there and buy on a regular basis are really the ones that are performing, and there's been this major shift, in that direction. And it happened quickly, and I think took a lot of people by surprise, and so here again, you're not alone. I think a lot of people struggled with that. And again, if you stick with me here for the duration, I think we're going to show you a way where you can, get that stuff behind you. So what's holding them back? Well, I reckon something's missing, and it's often something simple, that is overlooked. And in this case, I think it's different. I think it's going to be just a unique approach that's going to be what's missing. But there's typically something in the plan that's not quite right, and so this is a complete plan, and we're going to show you all of the answers to the plan that we have. So I think the thing that if I get it to what the heart of what's missing, if I try to go at that, I would say this: you need to follow a system that can adapt. So just like we said, shift from growth to value stocks, right? If you're out there and one of your metrics on stocks that you pick is, I need a certain threshold for earnings growth or something, this last 3 months is going to have been rather tough on you. See what I mean? So you need to be adaptable, and then therefore you'd be able to thrive based on whatever the market is throwing at you on the current basis. See what I mean? So, there's going to be times where we're in those high growth stocks. There's going to be times where, like now, we're in more of a conservative basket of stocks, which has kind of sailed through, the last several weeks, not giving us a lot of return, but also navigating some of the turbulence about as well as anything I've seen here as of late. So, that's something that you're going to see, which is pretty neat. All right, so your system at the end of the day, though, needs to be comprised of at least 3 things. If I had to boil it all down. And a lot of the people that out there are going to be visually oriented, so I'm just going to kind of draw it out, okay? So 3 sides, you come up with a triangle. 3 things, this is the best way to draw it out. So first cornerstone would be market direction. We're going to need to have some mechanical way to know what direction the market is headed on any given day, and then when to take action according to that direction, right? We're then going to need to know what to buy when the time is right. And that's the part that's very unique in this system. It changes the type of stock anyway that we potentially buy can change from campaign to campaign. And then risk management, ultimately, how am I going to manage these positions to try to get myself into a position where I can make 58%, on a year-over-year basis. Okay, well, in terms of market direction, what we really want, we want to keep the wind at our back, and in this case, almost all the time. In terms of trade selection, we're going to be nimble. We're going to evolve, and then with risk management, we're going to have to come up with some way to where even if we are only right 40 or 50% of the time, we can walk away with sizable gains because the stocks that really run, and the losers we keep quite small. So they can even stack up and be more losers than winners, and we can still move that needle 58% a year, okay? So I'm going to forgo the question, and I'm going to go right to it. These days I find that people are starting to get a little bit more antsy now that, COVID's been around for quite a while. We've all been cooped up in our homes, and, life goes on, right? It's time to start getting back to it. So I'm going to get right to it here. Number 1, market direction. Let's talk about the first main cornerstone of the 3, right? We're going to focus on market direction. It is the single most important factor in determining your success. In other words, it really is the most crucial element of this trading system that I'm going to be fully disclosing. Okay, so that is really the main focus. Everything else we do from there is going to have impact, but the largest impact comes from this cornerstone here. This is the main ingredient. Okay. All right, so what we do here at VectorVest is we're going to follow this particular timing model here for this scenario called the primary wave. And the reason that we do that is because of the nature of how fast the signal is. We're trying to really get that portfolio growth month over month over month. Okay, and so we're going to need a faster timing model to make that happen. This is a swath of data from the stock market. This is looking at all the major indices, combined down into one. At VectorVest, we call it the VectorVest composite. This is 8,600 stocks tracked as one unit. Okay, and there's no capitalization weighting or anything. It's a straight arithmetic average index. Okay, now why we do that is that gives us then a sense of what direction the market is actually moving in on a day-to-day and even week-to-week basis. And so this is looking at June of 18 to October of 18. I continue to use this data here because it proves a lot of points for us. One, you can see that this was kind of a messy time in the stock market. There was no true definable movement in any direction until it started to move the other way. you know, and yet we were able to thrive through this period, and in large part due to the signal, right? So if I start and work my way across, there's red down arrows, there's green up arrows. Red down arrows are times where we go to cash. Green up arrows are times where we start buying stocks the following day on a rising market, and we hold those stocks. We'll talk about management later, but we hold those baskets until a red down arrow is signaled, and we just rinse and repeat, okay? We just rinse and repeat. And so eventually when the market makes big moves one direction or the other, and it will, markets only really trend about 30-40% of the time, with anything meaningful anyway. So you're just kind of staying alive, chipping away, making a little bit of gain here, making a little bit of gain there, and then a big one will come in. Or we will avoid some kind of catastrophic downturn that can submarine you for months, and you have to kind of try to peck away and climb back out of the hole. There's nothing more frustrating than that, because stock prices fall faster than they rise. So, we don't want to put ourselves in a situation, if we're trying to get month over month growth, and I mean going to new highs in our portfolio month after month after month. I don't want to get in a situation where I go down and I got to take 9 months to get back to a new high. So we're avoiding that scenario if we do what we're supposed to do here. And most importantly, we can actually make money even when markets aren't doing all that much. And sometimes very handsomely, surprisingly enough. Okay. But that's what we follow. And it's mechanical. It's published in our software every single day at the close of the day. Now, we do report on it in the middle of each day if you have VectorVest real time, but we only take the end of day signal. Okay, so that's very important, because then what we do is we use that and we look to go long the following morning if the composites are following through. In other words, since we only go long, we're looking for the composites, the stock market, if you will, to rise the following day after a signal is generated. And that keeps you out of hot water, okay, a lot of times. Not every time, but a lot of times. So that's how it goes. That's what we're going to be doing in terms of market direction. If I go over to VectorVest here real quick and go to the market timing graph, we'll pull this up. This is where we are right now. Take some of these lines off that we don't need. Okay. And we don't need those. All right, cool. So I'm going to come down here to the bottom. You'll have this little indicator here called primary wave. Okay. And we have been long since 519. Okay. So you can see it keeps you on the right side of the market most of the time. Anytime there's a bobble, it's going to get us out of there and get us out of harm's way. And then when the market really starts to run again, we'll be in there waiting to go. Here's what I mean about follow through. You see this signal here on 5-7? We actually didn't go long there. And the reason we didn't go long is the next day was a pretty tough day. So there was no opportunity for us to jump in. Okay. So, it happened several times here actually. And that's one of the main things that I wanted to try to get across. We're smart about what we do. Okay. So the next most important cornerstone is trade search selection. In other words, what kind of stocks am I going to pick? This is the evolve part. This is the missing link, I think, for a lot of folks. So many folks follow kind of an ABC mentality. No matter what it is, whether it's running a scan and always running the same kind of a scan to find stocks to buy, or whether it's looking at a chart and always looking at the same indicators, and I'm not saying there's not a lot of value there. In fact, I would argue that there's a tremendous amount of value in all of that. There are certainly some very solid scans out there that make money a lot of times, and and there's definitely great chart setups, and otherwise there wouldn't be professional traders, but in order to thrive and really move the needle potentially a lot better for you, this is going to be more of an adaptable situation, more of an evolving situation. But the good news is you don't have to learn 100 techniques. That's the really cool part. So let me show you what I mean. which search do I love this guy. Looks like George Carlin. Guys remember him? Oh man, I miss that guy, you know? He was my favorite. I think he was my favorite comedian ever. But anyway, aside from that, you know, he's illustrating the challenge, which is, you know, my goodness, I've been running a lot of MACD crossover scans right now, or I've been doing whatever and not having a lot of success, you know, so what do? You know, what's the best search? You know, what's the holy grail, right? What's the number one strategy to use right now? Well, we're going to show you how to get there, and that's going to be by using a product we have, another tool called the Derby, okay? And so the Derby tool takes a lot of these different kinds of ideas that we just talked about, like even a MACD scan is part of the Derby tool, okay? But what it does is it takes over 180 of those scans, right? And then we have the ability to track performance, recent performance of how well those scans have been performing on a day over day, week over week, and month over month basis to try to fit, well, in this case, not try, to find, you know, the strategy that has been doing the best over all of those different metrics, okay? And so what you're inevitably going to be learning here in this segment is that this tool is incredible because it's going to point you in the right direction of, you know, you asked me that question, you know, what's the best search right now? This gives you the answer. That's what this tool does when used correctly. So that's what we're going to take a look at right now. We're going to go over into VectorVest. All right, and one of the tabs that you'll have, if you decide to, you know, take us up on this offer, you're going to have a Derby tab. And in the Derby tab, you'll have all of these different searches. Now, some of them are going to have funny names. A lot of times, though, when you click on a search, you know, there's a search description. It shows you what stocks are in the search. You know, so search description is helpful. This finds stocks that are greatly overbought and have negative earnings per share. So the sort brings the most overbought stocks to the top of the list. This is a shorting strategy. Okay, it's looking for overextended stocks that have no real reason to be overextended, right? And then all the way down the list, you know, there's going to be market cap searches, there's going to be growth searches, there's going to be value searches, there's going to be only S&P 500 searches, only NASDAQ searches, only Russell searches. There's going to be, you know, only technical analysis scans of different sorts like MACDs and stochastics and RSI, you know, all of that is actually in here. Contra ETFs, you know, is one of the scans. So it points you towards what's working right now. Now, this is just a one-day snapshot, and you know, let's be real. In terms of scientific evidence, that doesn't really give you anything other than these stocks are hot right now today. You know, these were some of the best opportunities today based on one data point. You know, one slice in time, which doesn't necessarily mean anything in terms of strong validity, right? What we need is more evidence, I would think. And what struck me as I was putting this this trading system together was we've always had really 90 days of this data that we could leverage that we didn't for, you know, for a couple of years until I put this together. And so instead of just looking at what are the hot strategies right now, and there are some great opportunities there, don't get me wrong, we're going to look at more historical evidence. And the way to do that, there's 5 different modes, okay? I'm only going to teach 2. I wanted to make this as robust as I could, but as simple as I could when I put it together. And you always want a confirming piece of information on any decision you make, right? I mean, I know I do, right? If I'm going to have a surgery, you know, let's go get a second opinion, you know, something like that. So we're going to use 2 modes. The first mode that we're going to use is called vary the start date. Now, why I chose this mode is it's going to put the most consistent money-making strategies over the last 90 days at the top of the list when I take the calendar all the way back to the oldest date possible. We only have 3 months of sliding data. It's always just 3 months. There's holidays and everything. It usually runs to about 61 to 69, I think, or so days that you're able to analyze, just depending on how many holidays there's been or lack thereof, right? But we can run it from, say, March 9th to March 9th. That's 3 calendar months. And we're going to get a very different list of things at the top of the list now. And all of the, we've only got bullish strategies that we're returning. So I did do a filter up here to eliminate any short strategies because we're not looking to go short. We're just looking to buy. Okay. Now, the reason Jailbreak is at the top of the list right now is not because those stocks, the 10 stocks that are found by that search, are doing the best today. It's because having bought the 10 stocks from this search on any day in the last 65, it's produced the most profit on a consistent basis. In other words, the first run is from March 9th to June 9th, the entire data set. The next run is from March 10th to June 9th, and then March 11th to June 9th. And then, on down the list, all the way down to the most recent data, which would be today, where it didn't do a whole lot. Well, it was up 3%, actually. 6% from yesterday to today, 9% from the 7th to today, 10% from the 4th to today, and so on down the list, okay? And yet, one would think, with the markets being high, bottom fishers probably aren't the best solution, when in reality, maybe you're frustrated because a lot of the great stocks you're thinking about, like Moderna or a Tesla or whatever you think is great, right? Apple, whatever the case, aren't really doing as well as you think they might, since the stock market is seemingly hitting new highs. Doesn't seem like necessarily the stocks that come to the forefront of your mind are corroborating that evidence. You know what I mean? So it's interesting. I mean, people are going out there, they're taking risk on positions, and they're buying these little small caps is really what's happening. They got so used to those 30 and 40% months last year, that they're trying to do it even now, it seems. That's what the data is showing here. Marijuana stocks have been heating up. Energy stocks, petroleum's actually been making pretty good run, right? So it gives you a whole lot of information. And one is, looks like some risk on trading has been kind of a theme. 2, energy stocks are moving, marijuana stocks are moving. Number 3, and who knows how much data this can give you on a daily basis. But what we do know is Jailbreak has been the most consistent performer here lately at this time. And then what we want to do is cross-reference this data with another list, because that's looking at buy and hold, which, let's face it, if a market is really doing nothing more than going straight up, which really has been the case for the stock market for the past couple of weeks, these kind of risk-on strategies are going to tend to work their way to the top of this list. So one thing to do is to say, all right, what happens if I just look at how well stocks from a search perform over a week's time, and sort of slide that analysis through the data. So I'll take another swipe at telling you exactly what that means by showing you the graphics here. But energy stocks goes to the top of the list now. But now that's because I'm only looking at one day. Let's go to 5. We're going to look at 1 week. 5 days is 1 calendar trading week. Okay. Finding fireworks stocks is now at the top. Thornton's Thunder, Beeline Boppers, Ballistic New Highs, Show Me the Money Long, so on. Now, it's a different list, right? These strategies here are the strategies that would give you the best chance to be successful in just the first week, because it's looking at only a week's hold on every single test that's been done. So instead of buying from March 9th and holding the stocks all the way to today, this one is just holding for a week. Okay, and so 3.9 to 3.15, 3.10 to 3.16, 3.11 to 3.17, and so on, all the way down to the most recent data. Okay, and boy, this one's really on fire. Look at some of these recently. 5.25 to 6.1, 25%. 5.26 to 6.2, 19, 12, 21, 6, 7, 7. So this sucker's heating up, man. This finding fireworks stocks. And, it stands to reason fireworks stocks, when they're clicking, if we're going to name something fireworks stocks, It's probably not going to be something that's going to try to get you 1 or 2% here or there. You know, that's a strategy that's going to try to really hit the ball out of the park. So anyway, what we then do is we look at what strategy is the highest in both lists added together, you know, or in aggregate. Like, for example, energy stocks is 1, 2, 3, 4, 5, 6, 7, 8, 9 on this list. That's a score of 9. If I go back to the other one, energy stocks is 1, 2, 3, 4, 5, 6. 9 plus 6 is 15. Is there any strategy that's better than energy stocks? Has a lower score, right? And so what we do is we print these out. A lot of times it's real easy. A lot of times the strategies are up there in the top 5 in both lists. Doesn't seem to be the case today. Thornton's Thunder, however, let's check that one. 1, 2. Let's go back to the other list. 1, 2. So Thornton's Thunder is the most consistent strategy in VectorVest right now. Whether you're buying stocks for just a week or whether you're buying and holding stocks, it is the #1 strategy. There is not a better one. Now, this strategy really looks at low price stocks, okay? So in the event that you're somebody who doesn't want to buy $1 and $2 stocks, okay? There's answers for that. You can simply come over here. You can do the same analysis and use a minimum price of 10 and a minimum average volume of 500,000 and do the same analysis we just did. I'm not going to go through it twice, okay? But you know, the science is looking for the consistent winner, right, on both lists. Some of you are going to have larger accounts, and so you might go the 10 and 500,000 direction, you know, to give you more liquid, higher price stocks, you know, that you can actually do, right? And then some of you might have smaller accounts or might be breaking off a smaller tranche of capital that you want to try to grow as quickly as possible, right? And then you could go back towards the all filtering and go with a Thornton's Thunder. Lots of people in this current campaign that we're in went Thornton's Thunder. I went with prima donnas because I've got bunches of people following me and I wanted to provide coaching, you know, that said, look, and I did. I said this the day we chose. I said, those of you that want to be aggressive, you go Thornton's Thunder. And they should have been in Thornton's Thunder this whole last couple of weeks, okay? And then those of you that want to be less exposed to those small cap stocks, really small, $1 and $2 stocks, okay? $4 if you're lucky. You know, go the prima donnas route because that's what the data was saying. And both campaigns have been profitable. Thornton's Thunder has been more profitable and stands to reason. It's a faster moving strategy, you know? So I want to get that point across because people seem to have a lot of questions these days about, boy, gee, you know, the strategy has these little teeny tiny stocks in there and I'm not comfortable with that. And so what I'm saying is just go to the 10 and 500 filters here and you're still following the same methodology. And in fact, I went ahead and did it this past couple of campaigns just to prove the point, okay? So it works no matter how you slice and dice the data. If you're somebody in between, you can go 5 and 250. And I'm going to tell you why. The most important ingredient is the timing model. Then if we get a halfway decent search, you know, it's going to really do well. The reality here is you're getting the best possible search, at least based on the last 3 months of data, no matter what price level or volume level, you know, is most appealing to you. And so I've got a document that I supply to everyone that walks you through most all of this. This explanation I'm giving you, of course, is going to be very helpful. But it shows you how to go through this whole process, literally click by click and step by step. You know, Section 3, Part A, Step 1, click on Derby tab. Step 2, you know, go to analysis mode and choose sliding window, and you know, walks you through, you know, print it out, all that stuff, okay, and then helps you with that. Also, you're going to find out that there's some coaching available where we actually walk people through this, take you by the hand, and make sure you're doing it right on a daily basis. Okay. All right, but that's how we do it. Pretty cool and very different, I'm sure, than what many of you folks are doing right now. You might have questions about what's the portfolio looking like. So, we're going to go right to it. The good news for me is I never have any hesitancy showing it. It's pretty darn good, So anyway, we're going to go to RoboTrader. Here it is right now. We're currently 89.21. So we've made about 6%, I guess, since February. But if we go to the graph, if we talk year to date, okay, if we talk year to date, where's January 1? Well, it'd have to be January 2, I suppose. All right, so here's January 4th. January 4th, we were 64.50. So since January, since the start of the year, we're up 25%. And it's completely just 100% follow the steps. So, you get the signal, okay? Then you go to the Derby, you find the best search, you buy the 10 stocks from that search, and then it's just a matter of knowing when to get out, right? So that's what we're going to talk about next. Let's go talk about it. Now, I know all you guys are going to be talking about how awesome some of these meme stocks go. Look, this is a system that's going to work from now until the end of time, as far as I'm concerned. And it's going to give you these kinds of reliable performances moving at this kind of clip from now until the stock market, isn't around anymore, which I hope is never the case. All right. So anyway, risk management, the best choice for letting winners run and keeping losers small. Okay. No exit plan is not an option. I think we all get that. I just like the funny picture here, I guess. At least he's got the parachute, right? He's got an exit plan. Actually, he's got an exit plan. So we're going to use something we call Profit Locker. Profit Locker is a patent pending product here at VectorVest. It is awesome. And we're going to talk about why it's awesome. And we're going to show you exactly what settings we use to manage this portfolio. So similar to a floating stop that leaves a lot of wiggle room when you're below a target you're trying to achieve, but it's going to tighten the closer you get to that target. Okay, it'll also chase a stock higher if it goes above your target. So it doesn't stop you out once the target is met. It actually just tightens into a very tight trail so that if the thing just keeps exploding, it'll let it go. But the slightest bit of weakness, it'll knock you out. In other words, I've always hated the idea, haven't you, of like, if I'm going to use a 30% gain as a target and then set a hard stop with a broker, I've always hated situations where something, gaps up 40%. You got a tremendous, news article that came out and the thing just keeps running and you get bounced out of that sucker at market at the open, because you forgot to cancel that order out or whatever. There's nothing more frustrating, than cutting something and seeing it climb astronomically higher, especially over the very short term. In fact, I've always had more trouble managing, gains than I have managing losses. I've always been pretty good on the loss side, but I've always struggled with the gainers. And I found early in my career that 30%, 30 to 50% is kind of the sweet spot for where I should be. But what this does is it lets them keep running if they keep going, So my pro tip is going to be use Profit Locker. We're going to talk about why. So I'm going to come in here. This is the portfolio that we're managing, right? We've got stops on every position right now. And if I come up here to the management screen, well, let me show you this. Here's the complete trading system in a template format. We're using the primary wave, right? Right now, I told you we're in prima donnas. Some of the folks in the Jockey Club and have been sending me emails and are just delighted. We have been using Thornton's Thunder, and knocking our socks off. That's okay. They're the more aggressive ones, which is good. And then go to cash in a primary wave down, right? So more detail, I can go to customize, So how are we managing these prima donnas? And it doesn't matter what strategy you're in. We always use the same thing. And the reason is it's always worked. There's been no reason to deviate from the plan over the past 3 years. We made one slight adjustment. We started out with a 21-7, and I was running a bunch of variations alongside even the initial live trading that we were doing, just to, I didn't want us to be on optimal F where we over optimize something. So I wanted to see, does 25-7 work? Does 30-10? And then, if they're all working pretty well, I know that, we haven't over optimized anything, and then a natural leader should emerge, and it shouldn't be some statistical anomaly. It should be, something where if I vary it just slightly to say like 29-7, does it do exponentially better or worse? If so, that would be a problem. You know what I mean? So you'd want 30-7, for example, to be fairly consistent. See what I mean? So anyway, 28-7 is where we landed. 28-7 is where we landed. We kind of went up the curve a little bit, found the sweet spot, and I like it. It's got a 4-to-1 risk to reward ratio, or reward to risk in that case, in the way that I stated it. So, for every winner, we can afford 4 losers to break even, and thereby, if we can be 40% right, which is essentially what we are, you can really move the needle. And that's the game. That's the plan, Stan. That's the plan, Stan. The reality is most of your trades get executed somewhere in between those numbers. Because if you look at this graphic here on the right-hand edge of this little screen where my cursor is, this black line, that is showing you linear stock price movement across time. And the reason we draw it out that way is so that we can show you the integrity of the curvature of the stop loss, and kind of our rationale and our thought on what is actually trying to be achieved here. And this is the best representation we can draw out for you. So just know it comes in several parts. You're going to have an initial trailing stop. Then you're going to have kind of a tipping point here where we branch off to accommodate volatility once we get ourselves into a profitable position on the trade. In other words, first objective, get profitable. Second objective, stay profitable, but give it some room. Third objective, as we start to really ramp up gains, start locking them in. Fourth objective, once we get to our target, we're going to make sure that we lock in as much of that as we possibly can. Okay, so get profitable, accommodate volatility, lock in profits, and dang sure make sure you hold on to as much as you can when you get there. That's the idea. Okay, that's how it works. So hopefully that makes sense. I'm sure that this system is quite a bit different than anything that you're doing now. That's okay. That's why this is so cool. It might be something that you want to give a shot. So I'm going to let you know how you might be able to do that. And I figure you showed up today because either A, or number one, your trading plan has stopped working and you're looking for something better. Number two, maybe you've just hit a wall temporarily and you just kind of want to move into something that's working well right now. Maybe 3, you just want to be trading more successfully in all market conditions all the time. You have enough success to where you're very, very comfortable and everything, but maybe you just want to kind of take things to the next level, right? Well, today you learned how to keep the wind at your back on your short-term trades. Now, when we say short-term, if I didn't make this clear earlier, and I don't think I did, I'm thinking back through my whole presentation right now, and I didn't mention this, but when we say short-term, we're not talking day trades. Now, we do sell stocks that hit stops intraday, but we're not day trading. Now, a day trade could happen on occasion, but it's seldom. So we're usually holding for days to weeks in this scenario. We're usually holding for days to weeks in this scenario. That's short-term. Okay. Also, a stress-free way to evolve with changing market conditions and pick the right stocks to trade, and then how you can automate it. Okay. So the big lesson: you can follow a system that will adapt and make money no matter what the market throws at you. This is living proof. We show it to people on a daily basis, every single day. So All of this is 100% viewable every single day of every single week. And I'm going to show you how you can do that. Okay, because there's no such thing as you can't do this. I learned, fortunately for me, at a very young age, you can do pretty well anything you put your mind to. There's obviously going to be some limitation somewhere, right? But I've done so many things that I told myself I could never do. Forget about whatever everybody else told me I couldn't do, right? I was the little fearful kid in the back of speech class that almost flunked. And now I go to Hong Kong and get on the stage with Steve Forbes. Probably the highlight of my career. That was a while back, you know. But you know, it's just, you can do anything you want to do. The key is, do you want to? I can't fix want to. I can fix need to. I can, you know, and I can fix you if you want to, but I can't fix you if you don't want to. You know, that's the key. So we designed this trading system for people who want a stress-free solution. If you're one of those people, cool, we can help. If you're not, that's cool too. You know, that's the deal. I can only help those that want, you know, and I can show you how you can adapt and thrive no matter what the market throws at you. So proof is in the pudding. We've been living, breathing, and eating it on a daily basis, man. If this thing didn't work, people would be telling you because we show it to them every single day. So here it is. Real-time Derby 30-day trial, $29. $29. That's it. I got a bottle of wine waiting for me at home that costs more than $29, man. Listen, that's less than $1 a day. If you don't do this deal, if you don't try to learn how to make 50, 60% a year reliably, have done it for the past 3 years in a row, likely to do it for the next 3 years to come, if you're not willing to give that a shot for $29, I can't help you. You know, you got to want to do it. But that's the deal. For $1 a day, for less than $1 a day, you're going to see whether it's going to work for you or not. I don't see any way that it's not, and that's kind of my experience here. So that's why I'm excited. We're growing like wildfire, man. You know, we got a bunch of people in this thing now. Anyway, all you got to do right now, if you want to take us up on the deal, is go to www.vectorvest.com/thrive. I'm going to go ahead and put that into the chat. All my YouTubers out there, listen, you guys know what to do. You don't need the extra coaching. You don't need the hand holding. You know how to get to our YouTube channel. You know how to go to vectorvest.com/thrive. I know that. No second guesses. So, I can't see the chat over there. So, thanks for sticking with me here for the last, 45 minutes or so. And get in the trading room, man. So, let's talk more about this deal. When I say $1 a day, you're going to get 1.5 hours of coaching every single day for $29. You're going to get, I'm going to repeat that again. You're going to get 1.5 hours of coaching from 4 of the very best instructors we have here at VectorVest on trading. You're going to get 1.5 hours every day for VectorVest Best for $29 every day of a month. That's crazy, man. That's crazy. I wish I could throw people from the club on the mic. We just can't do that. I wish I could. And some of them are in the room right now. They just come every time they can see anything we talk about. You might slip up and give the real secret, But what they tell you is they get more out of just one session than $29. We talk about all kinds of stocks that are moving. We got some good trades going on right now. Up FinTech, Tiger, TIGR has been one of our better trades here over the last couple weeks. I think we're up more than 30% in that one. In just a couple weeks. That one trade. And we're usually looking to trade 2, maybe 3 stocks a day sometimes. So not only that, we also then ask for stocks that people are trading in the community. We look at those stocks on the charts. And so it's very interactive, and we have a lot of fun. We really do. So the 4 instructors are Jerry D'Ambrosio, Patrick France, Glenn Tompkins, and Steve Chappell, yours truly, okay? And one of us is there every single day, and there will not be ever anybody else. Those are the 4, as long as we're all still standing 2 feet on the ground. Those are the 4. Okay. So, you know, in terms of trading, you're going to get the best we got. All right. So I'm sure there are questions. I'm going to go ahead and cut you guys loose on YouTube. Get out to that website, man, vectorvest.com/thrive. We'll see you tomorrow morning. I'll be the host. I'm the host tomorrow. So if you do the order now, I'll be there tomorrow. You don't like it, you can give me hell in the chat, you know. If I get you there, you're going to stick.